Welcome to Focus on Liberia Marketplace, where we promote all things Liberia. We strive to educate, elevate, and promote all things Liberia. So thank you once again for joining us at this time, at this hour. We had a little bit of technical difficulty, but as you know, one monkey don't stop and don't spoil the show. So we are here, we are ready to go. We want to get started. We're going to first just, get a little housekeeping. And we want, our illustrious gentleman there with the nice suit on, these financial guys. Please share us a little bit about who you are, where you come from, where you live, what do you do, and what inspires you. Thank you.
Well, thank you, William. My name is Borbi Bropleh. I'm obviously from Liberia, Monrovia, Liberia. Grew up right down Old Road. Graduated from St. Patrick's High School in Liberia. Later on, attended the University of Liberia for a short time and the Don Bosco Polytechnic studying accounting and economics. And then moved to Ghana, where I spent 8 years of my life. Ended up graduating from the University of Ghana, Legon, studying philosophy and English. I did a combined major there. And then later on went back to Liberia, got married to my beautiful wife, Kalitha Weeks Bropleh, and got two boys, a 13-year-old Borbi Jr. and a 7-year-old Brandon Doba. And man, that's my life. I've been in banking since I came to the U.S. banking and finance. Early last year, I left corporate America to establish my own agency, my own financial agency. And I must say it's always been a passion of mine, sharing information about finances, especially so since so many people are left behind today as far as middle America or the middle class. I felt like they were underserved, or we were underserved. So it's been my life passion to get financial literacy out there. And it's interesting because I have a lot of friends that I'm coming across, old schoolmates and whatnot that are doing exactly the same thing. So I try to support them as much as I can as well. So that's pretty much my life story. I got two brothers. Let me just mention quickly. My mom is here. My dad has passed away, Dr. Naldo Patrick Bropleh, a few years ago. Okay. My mother still lives here in Atlanta, along with my my two brothers, my twin brother Bior, who you know what.
Are you the twin today, or we want to make sure it's identical?
We'll have to see. We'll have to see. And then Snoller as well.
This is nice. That is awesome. That is awesome.
And I have a younger brother also that's in the military, Sima.
Oh, Sima. Okay.
Yeah.
Salute to our troops, military here in Liberia. Which one?
Here.
Okay. Either way, we salute our troops here in Mama Liberia.
All right.
As you know, we're talking financial, so we got to do our little disclaimer. So, if not, we're going to get in trouble. You can't be talking about certain assets and you don't have to write documentation like we call it in Liberia, but here we say the license.
Yep.
So the content is for informational purpose only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on our media or written documents constitute a solicitation, recommendation, endorsement, or offer by Focus on Liberia or any third-party service provider to buy or sell any securities or other financial instruments in this and in our jurisdiction in which such media material may be shared. All content on this site is for information of general nature and does not address the circumstances of any particular individual entity. Nothing in the media constitutes professional financial advice, nor does any information on the platform constitute a comprehensive or complete statement of the matters discussed or the law relating thereto. So that's our disclaimer, folks. What we're saying is this is a media show. Although from time to time we will interview folks with the right license, please, before making a certain advice, contact your personal financial advisor or those who have the authority and the expertise legally to provide you with those advice. So, Borbi, now that we've come to this thing, tell me, let's start with life insurance in its simplest form. Where did this thing, life insurance, come about? Is this just something that came about in the 20th century time, or has this something that's been around for over 100 years? And so tell me a little bit
Um,
what it is and how long it's been around.
well, life insurance has always been around
Okay.
since I believe since the beginning of time. But in the more recent time frame, I would say life insurance has been closely linked to big banks and big financial institutions, right? Because your insurance is only as valid as the institution that guarantees it, right?
Right, right.
So, as bigger banks and bigger financial institutions came around with deeper pockets, you had life insurance being solely linked to those types of entities, and now you have insurance companies that insure other insurance companies so that if they go under, their whole portfolio is insured as well. So there's a connection there.
Okay, that sounds very good. I mean, you got insurance, and then the insurance company says, "My man, you need to insure me or protect me so that in case I can't pay this claim, I got someone that I can lean on." So,
Yeah,
tell me
exactly.
something. How when we talk about life insurance, tell me something. How big is this? Is this something where that I can yeah? How big is it?
Life insurance. Well, I would just say financial services as a whole, because they're all interrelated.
Yeah.
Financial services in the U.S. is about $70 trillion.
Okay.
70, yeah, $70 trillion. I
Woo.
mean, I'm talking life insurance, pensions. You're looking at mutual funds and other brokerage accounts, investments and whatnot. It's very large. And one interesting thing is, and you're a real estate guy, 70% of that money is controlled by the baby boomers, just that one generation.
Oh, wow. Wow.
Yeah.
Wow. That is some good information there to know. I mean, so what are you saying? You're saying that because the baby boomers right now, I'm guessing they're 70s and 80s right now.
Yeah. A lot of them are starting to hit 65. Some have already started. So, I mean, do the math. They were born. The baby boomer generation is folks born in an 18-year period between 1946 and 1964.
Okay.
All right. So right now they're hitting retirement at the rate of 10,900 a day.
Wow.
Every single day, 10,900 people in the U.S. turn 65, and that's going to happen for the next 10 years in
Yeah,
a row, nonstop.
There's a lot of what you just said. There's a lot of opportunities in the market for that, and I'm sure we'll get a chance to touch on that. Tell me, with the life insurance, is life insurance kind of something that's only limited to a certain age limit, and we do this to kind of educate our viewers and so forth. We don't want to go too fast and kind of things out. So tell me, if I'm a 10-year-old kid, do I get life insurance, or I have to be 21 or 35? Tell me a little bit about that. What's the age?
Absolutely. As a 10-year-old young child, you can definitely get life insurance. As a matter of fact, most insurance company will start at 14 or 15 days old.
Oh, wow.
Yes, yes. You wanna insure your kids the minute they're born, because think about it. Life insurance is not guaranteed for everybody. It's based on your health and your age. Well, if you have a child, wouldn't it be smart to get them coverage so that if something comes up later on, I mean, think about it. Kids are getting cancer now. Kids are getting incurable diseases and all kind of syndromes. Um, it's good to get them their insurance, when they're born. That way, they have that gift that you provided to them. They have it for life. Nobody can ever take it away from them once they have it.
But
And
I mean, that doesn't it seem a little interesting, because normally
mhm,
with insurance folks, they look to, I guess you can say, minimize their risk. But in this
mhm,
instance, we know two things are sure: taxes and death.
yeah.
What is this life insurance? I mean, people are gonna kick the bucket. That's not a matter of yes or no. It's a matter of when. So why would an insurance company uh, say to themselves, whether you're healthy or not? Why would they um, insure you?
Um, well, because a couple of things I want to say surrounding that. Number one, everybody is not going to die. You're right. Everybody is going to die as a given. Everybody is sure to pass away, but everybody is not going to pass away at the same time.
Got you.
So those that are alive will just pay for the few that pass away. And in fact, when they do their underwriting, and that's basically life insurance companies determine your mortality. They determine how likely you are and when you're gonna die. They calculate all of that stuff.
Underwriting.
Yeah.
Take a step back. What is underwriting? What is it, and what does it entail?
Okay. So for viewers out there, when you apply for life insurance, the life insurance company will look at a couple of things. They'll look at your age, and then they'll look at your health. All right. So life insurance goes by age, the price. Okay. Now, in looking at your health, they'll pull your medical records. Sometimes they ask you to do a medical exam. They'll draw blood and urine just to see how healthy you are and how long they think that you're going to live. Based on that, they'll give you a price. Now, going back to kids and younger children, they don't do any type of medical exam to them. They're pretty much guaranteed to get the life insurance, and they have the cheapest price. So it would be smart to give your kids the gift of life insurance. Now, we're not saying, I hear a lot of times, oh, I don't want to put that bad luck on my child to get them life insurance, or let me get them a rider on my policy. Because as a parent, if you get life insurance, you can add your child to your life insurance. It's
No,
called a rider.
you mean add them as a rider, meaning as a someone
Beneficiary? No.
no, okay,
No.
rider. So
Rider.
what is a rider?
Okay, a rider is something.
Or what?
That's funny. A rider is a extra feature that you add to a life insurance policy. That's separate from a beneficiary. A beneficiary is somebody that's designated to receive the life insurance money if something should happen to you as the insured person. That's the beneficiary. The rider, the child rider, is where you can say, I would like my child to have an insurance policy under me. So usually the child rider is for a lesser amount. So let's say you have a life insurance policy for $500,000. Yeah. A lot of companies will allow you to add a child rider where you can add your children to the policy, and they can get up to $25,000 if something should happen to them.
Okay. So you mentioned something, you touched on something, maybe it's something in our culture. I'm not sure, but I think there's a conflict here. Maybe one is we like to leave inheritance and legacy, but on the
Mhm.
other side of the fence, we're saying that if we put this life insurance on if we give our child life insurance, then we wishing death upon them. Have you had
Yeah.
some experience with that? Why is it
Yes.
taboo?
Yeah. It's a cultural it's a cultural obstacle that I have faced many times, and I'm sure folks from Liberia, other financial professionals from Liberia or other African countries, and other countries as well. Like I think people were telling me that in South America and Asia they have the same issue. Anywhere that doesn't have a long history or culture of life insurance as it is now,
Mhm.
will tend to think that way. There's this association of bad luck with having life insurance. Another thing I see sometimes is spouses um, will be skeptical of getting life insurance on each other, you know. And so our job is to just educate people and say, look, you have insurance on your car that you're driving. It's not even your most valuable asset. Your most valuable asset is your life. If you can insure your car, where the insurance on a vehicle is
Mhm.
probably the most expensive type of life insurance. Think about it. You got a car that costs probably $5,000 to $10,000, and you're still paying $150 or whatever a month. You know what I mean?
Yeah.
And that car is gonna, if you don't have an accident, you're not getting that money back. It's gone. You pay for the coverage. And when that car is sold and you get a new car, you gotta get another insurance policy on the new car. But for your life insurance can be so cheap. You could even be paying something like $20 a month for
Okay.
life insurance coverage, you
So
know.
let's segue into some of the numbers here and this thing we talk about inheritance and legacy.
Okay.
Uh, are you are you how does life insurance relate to legacy and inheritance?
Oh, that's a very good question. Well, as you may or may not know, life insurance is one of those things in the U.S. At least the death benefit. The money that your family gets if something happens to you.
Yeah.
It's called a death benefit. It's not taxed in America, so that money goes to your family tax free.
But you said
Every
tax is certain. The tax man is going. But you saying the U.S. has said that if you're a beneficiary of the life insurance, that Uncle
you get
Sam
the money.
Uncle Sam would just look at it and say, okay, you got it now. But when you're making on top of this, then I will come see you.
Yeah, exactly. You get the money tax free, and that's one of the probably the only things in America that you don't you don't pay taxes on. So if that's the case, that your family can get this money tax free, think about it for a second. So you've lived your life. If you're an average middle class guy or lower middle class person, which makes up the largest portion of America today, um, and you really have things haven't worked out so good, right? And
Yeah.
you haven't really been able to save a lot of money. Maybe you're not one of the baby boomers that controls all this money. You're just a millennial or one of the other later generations, and you really don't have anything to transfer to the next generation. Um, but certain things are certain. Number one, one day you're gonna die. You could use life insurance to transfer wealth essentially to the next generation. You know what? I'm gonna pay $50, $100, or whatever, so that if something is to happen to me early, my family has this money, and this money will take care of them. If nothing happens to me and I die anyway later on, my family still has this money to start some type of new investment or whatever it is that they need to do. You can literally create wealth in your family just by leaving them the right type of life insurance policy.
So in something that you mentioned about leaving something behind for your family, we also look at the I want to touch on this in our Liberian circle, bigger Liberian community, and so forth. We talked about uh, the death and how we come together as a community to help bury someone. Okay,
Yeah.
so I got someone who's listening, and they wrote in the comments. They said, "Sorry, I'm just coming on." This is from Mr. William J. Brown. He
Okay.
says, "Sorry, I'm just coming on." He said, "Can you speak on the benefit of final expense insurance for the Liberian community?" Final expense insurance.
Okay.
What is
Final
that?
expense. Okay.
Is that
Uh,
is that like burial, or is that just you know maybe that's what he's trying to talk about? Is
yeah,
that
final expense is essentially burial. Thank you, Mr. Brown. So let's step back for a second and break it down. So there are two types of insurance, life insurance, right? There's temporary life insurance
okay?
and there's permanent life insurance.
Okay.
Now, let's look at temporary life insurance. By definition, temporary means it will expire at some point.
Yeah.
A lot of people call them term insurance.
Okay.
It could be 5 years, 10 years, 15 years, 20, 25. Most of them stop at 30 years,
Okay.
which means you get this life insurance policy.
Mhm.
They tend to be much cheaper, the ones that expire. The
Yep.
term policies tend to be much cheaper than the permanent policy. So in certain situations, we would recommend a temporary policy if you have something that you're trying to protect. All right. Let's say you buy a house from Mr. King here,
Yeah.
and you have a 30-year mortgage. Well, you might want to get a 30-year life insurance policy, a temporary one that can cover the cost of your mortgage, and it's not very expensive. It's very cheap, right? The temporary insurance, they typically will not give you the insurance to insure you past age 80. So what does that mean? That means if you're a young guy and let's say you're 21 years old and you get a 30-year, yeah, it'll take you to what, 50?
Yeah.
51? Okay. Now, what if you are 60 years old? A 30-year life insurance policy will take you past 80 to 90, right?
Right.
So they'll say, no, we'll give you a 20-year because we don't want to insure you past 80. After 80, anything can happen, my man.
so what that means is that if you just playing the gamble that you're gonna go for another term, then you
Yeah.
don't want to think about that, right? Because when you turn 70 or 80, when that one stops, no one out there will want to give you
Yeah.
okay.
That's when you need it the most. That's when you need it the most. Now, most insurance company will allow you to renew it. But man, you could go from paying $50 a month and they will tell you something like $500 a month after the 30 years.
Right.
And nobody wants to pay that. It's like almost. So that's temporary insurance. And typically temporary insurance is not granted to people who are below 18 years old, right? You have to be above 18 to get temporary insurance. So if you're below that, you have to get permanent insurance, which is pretty cheap for young people anyway, right?
Well, I live in the US, man. So I want you to tell me about this whole life, right? And
yeah, I'm getting to that now.
Life, but yeah, you're making it juicy, my man. I want this is interesting. Go ahead.
So that's temporary insurance.
Yeah.
All right, let's talk about permanent insurance.
Yeah.
So under permanent insurance, you have a few different kinds. You mentioned a final expense or burial insurance, And then you have other types of insurance called whole life.
Before you get to the whole life,
Yeah.
hold that thought because I just got something came in from the chat. It said, can you speak on the living benefit of term life? So do you want to touch on that now or in the other half? It's up to you.
Okay. All right. I can talk on that quickly,
Okay.
but I want to make sure we address Mr. Brown's question
Yeah.
about barrier policies. So for temporary insurance, very few companies, I think about 3 companies will offer full living benefits.
Mhm.
That's a new thing for life insurance now, where instead of you dying completely before your family gets the money,
Yeah.
you know, in the regular term insurance is you die and your family gets this money. But
Mhm.
now 1 or 2 companies are doing living benefits. Now,
Okay.
living benefits, imagine for a second somebody catches cancer or has a stroke or a brain aneurysm or something like that. Some of these companies will allow you to start using the money in the life insurance policy while you're still alive. It's called living benefits. It's a new concept, so people are really jumping on those types of policies. It's slightly more expensive
Okay.
than the other kind. So when
Okay.
you weigh the benefits, it's probably better to get a life insurance policy with living benefits. And by living benefits, you have terminal illness riders. We're talking about riders again.
Yeah.
Terminal illness means if the doctor tells you you're going to die within 6 months or a year, it's
Okay.
a terminal illness. Almost all insurance companies will start to distribute that money to you before you die. It's a new thing. But as far as chronic illness, that means you there's certain number of things that you're not able to do by yourself, like putting on your clothes or feeding yourself. There are 6 things that they expect every healthy person to be able to do. If you can't do 2 out of those 6, then you're chronically ill. Critical illness is your heart attack, stroke, cancer, or maybe you have a bad accident that lands you in the hospital or something. You know, those riders, some companies have chronic and critical that you can add to your policy, and they will pay out to you sometimes up to 90% while you're still alive, 90% of the money in the policy.
Wow. That's pretty interesting. This guy said, JB Braun, he's persistent. He said, you got distracted from the final expense question.
No, Mr. Brown, we're not there. We're getting there. All right. So the final, let's address this issue of the final expense. Final expense is usually given to people who want to have something set aside for burial. You know, you want to be able to cover the cost of your burial, essentially everything is surrounding that, right? Is usually final expense policies are usually granted to you usually find older people getting those policies, people who probably never had life insurance growing up. Or another critical thing that I always try to educate people on is the insurance that you have at your job is not yours. And you
What?
don't know when you're gonna leave that job. It's
Come
better
back
to
to rewind. So at work, when you go to work, corporate America, working for the nice Fortune 500 company to tell you part of your package, you can pick a life insurance company every year. You get excited. You pick the one that's, I don't know,
yeah
3 times your annual salary plus
yeah
this and
yeah
that.
yeah
You're excited about it, and you go home, and at home you run into your buddy who's telling you to get life insurance. You said, "My brother, I already got it. I got a good one," and
yeah.
you're happy about it. And he says, "No, I'm talking about one outside of work." And you said, "Look, I already got one. One is good." What do you mean by that's not good, or you should get not good, or you should get something that's outside of work? Why?
It's good to have. First of all, the policies that is offered at your job is called a group policy. Usually, is very cheap. In
Right.
fact, some companies will even pay for a certain amount of insurance for you. Like my old company they covered $40,000 of life insurance free, and then you pay something extra to add more to it,
Mhm.
I would say get those any day. But don't rely on it to be your only life insurance, because you know how many we had, what, 40 million people lose their jobs since the beginning of this year.
Yeah.
That's why people like us are so busy, because people are coming now realizing that, oh my God, there's this coronavirus all over. People are dying left and right. There's no hope in sight. And I just lost my insurance policy that I had at my job. I thought I would have it, but I don't have it. So it's critical to get insurance outside of work. And secondly, think about it. You've been working there for 10, 15, 20 years. All right. You were 20 when you started. Now you're 40 and you just lost your insurance. Now you're gonna have to go apply for insurance at a much higher age. And what's gonna happen is gonna be
So
more
what's that mean?
expensive.
That's the guy who's gonna tell you that insurance is $500 now a month.
It's gonna be up there. And then the second thing is, okay, you're not 21 years old anymore. You're 40, 45. Your health is not the same. You know, maybe you got a little weight, or something else has started creeping up, blood pressure and all of that kind of stuff. So it could affect the price that you pay. But you're gonna get me in trouble with Mr. Brown. Let's address that issue.
Okay, go ahead.
So let's talk about this final expense. Final expense is usually very expensive, because most final expense policies, they don't do any type of medical exam or any of that kind of stuff. It's mostly guaranteed issue. They just ask you a few questions just to know that you're not like on your deathbed and now trying to get life insurance. Some of them will give you a grace period. Okay, sir, we'll grant you this guaranteed issue insurance, but we'll wait 2 years or 3 years.
Mhm.
If something happens to you in that 3-year period, if you die outside of a regular accident,
Yeah.
if you die from any health reason, then we're not going to pay out. We'll give you your money back. Maybe we'll give you a 10% interest on it, but we're not going to give you.
That if for 5 years you were paying maybe $100 a month, so I guess $1,200. So that's what, 6,000. So they said,
Yep.
look, 6,000 plus $600,
Mhm.
right? Because you
Yep.
didn't pass that limit. Now, is that just yes or no? Is that like a burial insurance? How does it pay out? Is that where when you pass away now you get this? Is it like a life insurance, or is it a burial insurance? I want to make sure that we get our audience clear that the final expense, because it sounds like, okay, final expense, that means that this is it, the last bit of money I gotta come out of pocket to help with the burial or whatever. I don't want to leave that with my family. Or is this just another kind of life insurance?
It's just another kind of life insurance. It's usually with a lot of companies, the final expense policy is usually surrounding burial, right? It's for burial.
Okay.
But you got other types of permanent insurance, like guaranteed issue. Let's say you have a older parent,
Mhm.
or somebody who is not in the best of health.
Yeah.
You don't want them to go to get the regular life insurance where they'll have to do a medical exam and test their blood. They might not even pass.
Yeah.
There are some companies that do what they call a guaranteed issue.
Okay.
They say, you know what, no medical exam, nothing. They'll ask you a couple of questions. Do you maybe have HIV? Or sometimes companies, if you have, if you're on dialysis, you have kidney failure, especially the advanced kidney failure, they won't do it. In many cases, I think all cases, if there's any type of mental illness,
Yeah.
and they won't cover. Outside of that, they say whatever the case, we'll give it to you. Again, some companies will give you a 2 to 3 year grace period.
Mhm.
After that 2 to 3 year grace period, if nothing happens to you, you're home free. You got your insurance.
You got full insurance. Okay, so now we get to this point. You got Liberian parents raised in Liberia, but they happen to have 3 or 4 of their kids, or you guys, you know, with the kids, they have us over here now.
Yeah.
Now we the kids, we grow up, we are working. We like, man, you know, we know that our parents will go one day, but the Oma don't want to, or the Papa don't want to get this thing. Can you sign them up? Is that something you can do on your own, or no, you have to have consent from the parents?
Well, it's something called insurable interest. Of course, being a child, you definitely have insurable interests on your parents. And
Okay.
and there's some other ones too, like spouses have insurable interests. Obviously, your children and children to their parents and whatnot. So you can get insurance on folks like that.
Whoa,
You can
pause.
also get insurance on
Whoa, pause.
business partners.
Pause, my man, pause. Go back there.
Yeah.
Saying that for us kids who are here with Liberian parents and they don't want to get this insurance, that we still don't have no excuse. We can still come together and get it. I guess you can say in so many words, behind the back. Not on, you know, I mean,
Well,
our focus is probably going to be on the part like, okay, I want to give my parents one of the best funeral now, right?
okay.
This thing in America, I hear is between 15 or 25, 15 or 25K for, you know,
Yeah.
15, 25K for good burial. So, you know, without talking to them, because they're gonna cuss me out, they're gonna yell at me. So I may even lose my little inheritance in Liberia.
Well, a couple of things. Let's talk about a couple of things, William. Number one, you're talking about parents in Liberia. Do you mean that they reside in Liberia?
No, they reside here.
They reside here and they have a social. Okay.
Yeah, but they just don't want to get that.
Yeah. You know, there has to be some type. That's where you get a professional to talk to them, to get them on board, because most insurance companies they'll require some type of signature from an adult.
Okay,
Right.
so we just want to make it clear. So you can't just go behind your parents then back and say,
You
I'm
can't
going
do that.
to show them.
First of all, they're probably gonna do some type of phone interview anyway.
Yeah.
A lot of companies will call that person up to interview them. They they'll test for certain things. Is this person in their right mental capacity? You know, like I say, if you know, if you have some type of mental illness, a lot of insurance companies are not going to cover you, right? So they want to know all that stuff. They'll pull the medical records and sometimes they'll do a phone interview. And they'll ask for the person's email address. It's called, in financial services, it's called Know Your Customer.
Right.
Even though you're the one getting insurance on your parents, but they're an individual with an identity. They want to make sure you're not trying to get insurance on a fake person or do money laundering and all that kind of thing. So yeah, they have to have consent to get insurance on him. The only people you can get insurance on without any type of consent are your children.
So let's kind of switch gears for a little bit.
Mm-hmm. I did want to talk about another type of insurance before we switch. And it's probably one of the most important ones for now. It's under the permanent life insurance category. So you can, remember we talked about you can use life insurance for legacy planning.
Yeah.
You know, to transfer wealth to the next generation and whatnot. So under that permanent insurance category, there are a couple of different types. Number one, there's a permanent life insurance that actually you are allowed to put more money in, and than the premium that's that's target, the premium that's required, right? So let's say, for instance, your life insurance premium is $100 a month. This particular type of life insurance, which is called universal life insurance, you know, there are different types. There's the kind that the money is invested in the stock market, it's called variable. And the kind that the money is not invested in the stock market is called indexed. Index universal life. People use that for it's investment grade life insurance under the IRC code 7702.
Okay.
Just like you have 401k is an IRS code, is for it's a retirement account where your company puts money into this account and it's invested, right?
Yeah.
They put your money there before taxes. Okay. So 7702 is another type of life insurance that you can use for investment purposes as well, where you're able to put more money in. Let's say the premium is $100, but they'll allow you to put up to maybe $300-400 in there if you want to.
Oh, just because you're you're happy with the type of return that they're offering in that particular product. So you want to take it.
Yeah, they will offer you. And for instance, I see the index universal life insurance policy being very popular right now because it has a guaranteed floor. So they're not investing in the stock market, but they mimic what happens in the stock market, like the S&P.
Guaranteed floor. When you say guaranteed floor, meaning your money will not lose.
You would never lose money.
Okay. You'll never lose money. Okay.
You will never lose money as a guaranteed floor. Some of them have a guarantee of up to 0.75%, which is 10 times more than what you would get at a bank. They guarantee you at 0.75%. So you will always gain something, even if it's not a lot. But it can go up as high as...
They try to get your money small, even the smallest one.
Yeah, but I mean, look, you got that option, or to keep it in the bank and get like next to nothing, maybe 0.02, 0.03. So if you're getting 0.75, that's not bad. But it can go up to 15, 16, 17%. Now, what does that mean? That means if the stock market if it crashes like it did in March and April, if you had your money over there, you didn't lose anything. Like the guy who had his money in the stock market, you didn't lose anything.
Yeah.
However, there's also a ceiling. So with the stock market, there's no ceiling. Your money can go as high as whatever, right?
Yeah.
But it can also go as low as whatever. In an index universal life, you have a floor and a ceiling.
Okay. So it's a give or take. You gotta.
It's a give and take.
Okay.
It's a give and take. A lot of people do not want to. They want options. People always want options. You may not want to risk all your money in the stock market. What if you're about to retire? Yeah. There's something called a retirement red zone where you have like 10 years to retirement. You don't want to be playing around in the stock market. You want something guaranteed and secure, then that would be a good option for you.
Correct.
Also, people use those policies. Let's say business people.
Yeah.
I have a business and you're my business partner. We're in business together. If something happens to me, God forbid, that's going to be a problem for the business, right?
Yeah.
So you take out a policy on me and I take out a policy on you. So if something happens to you, Mr. King, your value to this business, I would say, is $1 million. So I'll take out a $1 million policy on you. You take out a $1 million policy on me. Sometimes they call it. Sometimes they do it where you can just take the life insurance money and just give it to the other person's family, and then you buy them out of the business.
Yeah.
Buy-sell agreement. So we got a business. Your family doesn't know anything about the business. They're not even interested in it. If something happens to you, I would just take the insurance money and just give it to your family, and then they go buy the business. Yeah. It's all agreed. So yeah, that's pretty much, I wanted to touch on that a little bit. People use those kind of funds for different things. Those are the kind of, you can set up some of those type of policies for your kids because they can use it as their retirement account. So even if it's a baby, you set up one of those funds for your one of those policies for your baby. The premium is very small, but they have a long time to grow it.
Yeah.
So people are man, people's kids are, my kids, both of my kids have one of those. I have one, my wife has one. I recommend it to be part of your portfolio, definitely.
Nice, nice. I have so Bobby, before we move on to talk about debt,
Mhm.
tell me if you've covered a lot. If someone wants to get a hold of you,
Yeah,
tell me a little bit. Are you how insurance work? You in Georgia, but you have
yeah,
offices in
uh,
many places. I'm in California, sunny California. But tell
yeah.
share with the folks, and then I will put it also in the comment area if they want to get a hold of you to talk to you and they're like, you know what, I need to quit sitting on the fence. I need to make this happen.
Oh man. Well, I don't know if my number, are you able to put it up?
Yeah, yes, I'm able to put it up. So
Yeah,
tell me
just give me a call. We can have a conversation. You know, everybody's situation is different.
Mhm.
I'll do a consultancy with anybody. I don't charge for consultancy and
Okay.
whatnot. I don't even charge for the advice that I give. It doesn't matter what state, because my company, we operate in all 50 states, Canada and Puerto Rico. So it doesn't matter what state you're in. We have somebody in the office that can help you out.
You
Um,
have your office number you can share or a number you can share to
yeah, sure. It's 404
uh-huh,
645
uh-huh.
5358.
Okay.
Or you can email me at borbibro@gmail.com. So B as in boy, OR, B as in boy, I as in India, BRO
Mm-hmm.
at gmail.com.
Okay.
Yeah,
That
so just call or
email you. Good.
email me. Yeah.
In when someone is looking at their budgets,
Okay.
uh, and as we talk about, we're going to segment into a debt. So
Okay.
as someone who's looking at the budget, where in which line of priority does the life insurance fit, and I guess in which order, and then also tell us what is debt management.
All right. Well, so let's talk about budget for a second, and I'm glad you brought that in as a good segue because, you know, I don't consider myself a life insurance agent, even though I'm a licensed life insurance agent. Um, uh, I'm a financial coach or financial educator. My mission is getting people financial information so that they can make the best decisions for their families financially. No family left behind is my mission, right? So I will never set up a life insurance policy for you outside of your budget, okay? Because that's part of what I do. I have a system. In fact, it's 6 steps to my system. The first step is cash flow. We have to know how much is coming in to the household and what's going out, right?
Okay.
In some cases, there needs to be some type of financial analysis. So you might need to set up a budget, you know, a budget that you stick to. I went through that process myself, so I know the value of having a budget. In some cases, you need to make more money. So you got to figure out ways how you can generate more money to live the kind of life you want to live. The second, yeah, go
So
ahead.
when you look at debt, what are you looking at when you say debt management? Is the debt and expense, is that the same thing? Or will one trigger the other one? What is debt compared to expense? How do you?
No, debt is not exactly the same as expense. Debt creates more expense because you have to service the debt. You have to make payments.
Okay.
So those payments that you make on your credit card, your mortgage, your car loan, your personal loan, your student loan, those payments that you're making, they
Mhm.
all fall within your expenses for the month.
Okay.
So we'll look at what your expenses are, and then we'll look at Then we come to debt because we're trying to find money for you, right? To do the kind of things that you need to do. Once we list your expenses, we look at your income, there should be some type of margin. Now, if we do your cash flow analysis and we find out that you're spending more than you're making, and that's a problem. Obviously, you can't get a life insurance policy at that point.
I mean, somebody, man, COVID-19, my man, but life insurance, I like to hear about your life insurance. I can squeeze out a life insurance money to continue to build my legacy.
Okay.
But you know, this debt management thing you're talking about, man, right now in COVID-19 era, how does that help me sitting down looking at this stuff right now when maybe something is not coming in? Talk to me about is it okay for me to have a conversation with you, or am I wasting your time?
No, is that a question that came from somebody, or you just asking?
I'm asking.
Oh, okay. No, it's definitely not a waste of time. And matter of fact, that's what I do. I help people with debt management. I've worked in finance for over 12, 13 years now. And most of that time I worked in credit. So I understand the credit system. I understand debt. You know, we need to come up with a plan for managing that debt. We also partner with different companies as well that do debt management and also tax management, because a lot of times one thing leads to another, right? Maybe you're in, a bad business loan, or you got a couple of credit cards and things didn't quite work out. Maybe you got sick and was out of work, and so your credit card balance grew, right?
Yeah.
Or maybe you fell behind on your taxes.
Why is it important to reach out for help in that situation? Why is it important that, I mean, you're a professional, and someone is like, look, I got this mounting of debt, and right now I'm unemployed, and I have some meager resources coming in. Do I just give up, or
no,
just speak with you and see how we can maybe get my creditors on board and see what can be done? Should I be approaching these creditors myself? It feels like I'm approaching the wolves to myself.
Yeah, I mean, if for the average person, I would recommend just getting help. Call me, we'll talk about it. Going to the creditors by yourself, you really don't know how to negotiate that kind of stuff. You don't know what they need. You could get a bad deal, because they're gonna look out for themselves. They're not looking out for you. They're a business, right? In many cases, those creditors have already even gotten all their money back from you, but you still owe them money because of the kind of interest rate that you had on that loan, right? Yeah. So it's important to talk to a financial professional. Again, we don't charge to talk to people. If we find a need, we can refer you to one of many different companies that offer, a higher level of service. And so that's pretty much how it will work. But I don't recommend you going to the IRS to talk to them yourself, or go to the creditor. It's complicated. You talk to somebody who's already a professional in the game. Yeah.
You have I want to go to the chat box and just I'll give you the list of some of the comments or questions, and then
sure.
Respond to them as you like. Okay. So I got Nison Myers, I hope I'm pronouncing it right, said, what about a life insurance at a bank? Sarita Thompson said, good question. And she wants you to pin the number on here. We did pin the number. They're telling me again to pin the number, my man. So in your response, give me the number and I will put it in here again. Maybe to miss the other comments. No problem.
Okay.
Do that.
All right.
And then it says, oh, 3 times. She says, please pin this information. I need to reach out to him. So, Bobby, you gotta give us a good name. Focus on Liberia. Make sure you
Okay.
reach out to the person, because we don't want them to call us and say that, you know what, these people don't return calls. So,
Okay. Definitely.
someone, Sando, oh, Sando helping out. They posted your number. So,
Okay.
Rita, you got the number. Sando said, if you do not reach out for help, the IRS will reach out or you will file for bankruptcy. I will tell
Yeah.
everyone watching to get help. If you are no professional, you wouldn't win with the creditors. Okay, go ahead.
Yeah. I mean, it's debt is one of the most important things now, because imagine if your debt gets, there's something called, I'll show you, I'll teach you one of the concepts that we teach to people when we meet with people. It's called the rule of 72. And if you're sitting at home, take the number 72 and divide that number by the interest rate that the bank is charging you. That would tell you how long it takes for that debt to double. So a quick math, if they're charging you 18% on a credit card, William, 72 divided by 18 is 4. In just 4 years of you struggling to pay that $10,000 credit card debt, that debt has doubled. So you've already paid 10,000. And
But I thought you said the bank is giving me interest on my savings of 0.75. I did doing 0.75, but then the turning around, they're charging me 18%.
Well, that's the deal.
Where all the 17%, 17.25% going? Labor? That's what they're charging for the labor?
Well, that's a good question. So
that's another question, huh?
it would charge you 0.05%, 0.03, I believe, is one of the highest right now. Typical savings account. But yeah, they will definitely charge you 18, 20, 22, 25% on a credit card, because they call it unsecured. Right? It's not like a car.
Come after you.
Huh?
Meaning they can't tie it to something?
They can't come after you. If you decide you can't pay the credit card balance, what are they gonna take from you? You try not paying your car loan and see what happens.
Yeah, ladies and gentlemen, we're talking
car up and take it away. Yeah, or your house, mortgage.
We will take it. Ladies and gentlemen, we are talking to Borbi, our expert here, financial management and so forth, and we're doing this home with Zone Live. You have to forgive me. I'm here with my kid, and my kid is the king of the house. So I'm going to go mute to find out what it is my young man needs for a second. If not, I will be in serious hot soup.
All right.
Borbi, while I do that, one of the lingering things here, please share a little bit about this collateral versus non-collateral, and why is it that the debt collector will keep calling you? If you can share about that, it seems like it would just go away, but it doesn't. Go ahead, please.
Well, yeah, I mean, as far as having a collateral as opposed to not having a collateral, so the debt that has a collateral is called secured, because they know that if you don't pay, they're coming for that collateral. It could be the car or the house or whatever. Some financial companies will offer you a loan, and they will ask you to use some of your personal property as collateral. So that's still a collateralized debt. If you don't pay back the loan in the terms, then they come for that asset. Unsecured debt that usually banks give out and whatnot, those debt, if you don't pay them back, the only thing they can do is report you to the credit reporting agencies and say, hey, this guy didn't pay his debt, and that will mess up your credit. So let's come back to why it's important to to seek a professional out as quickly as possible is because you have something to lose. You have your credit to lose, and other things, right?
Right.
Maybe you're planning on buying a house this year, and you end up losing your job, and because of that, your credit goes down the drain because you're not able to pay your bills, right?
Right.
These loans and stuff that you had, the credit card and all these different things. Well, they will definitely affect your credit score. So
Okay.
that's just in a nutshell what I would recommend if anybody needs to go into more detail, or if they want us to look at some individual scenarios, to just reach out. My name is Borbi Bropleh. I'm actually on Facebook, and that's the easy, and it's my name on Facebook. Or you can just give me a call at 404 645 5358, or send me an email at borbibro@gmail.com. That's BORBI, my first name, and then BRO@gmail.com. And I'll be able to address any type of question. Do you have any questions on the screen there?
Oh, yeah, I don't have a question, I have a comment. Sando says,
Okay.
credit is king. You would not know that cash is not king until you want to do a big purchase.
Yeah. Credit and cash, I don't know. It's just
It depends
but
where
I
you are in
see where
life.
Sandra is coming from.
Mhm.
Yeah, credit. You need credit to buy big things, right? Because in most cases, you're not paying everything off in cash. However, I would argue that if you have cash, cash is king, because with cash you don't need credit.
If
With credit, you still need cash in a way because.
so, you got COVID-19 happening right now.
Mm-hmm.
If an individual is in this position where they're considering just uh, maybe um, looking at all of the debts and calling the creditors or whatever it is and saying, hey, you know what? Things are not going, I'm suffering in economic, financial injury right now. Uh, explain why right now may be a good time to get the ball rolling to engage in the services of a debt management. And as Borbi mentioned, his is free. So, why would someone want to kind of do that now versus waiting till things change to the better?
I mean, but think about it. If the longer you wait, the more in a hole you are. Because just because you stop paying the debt doesn't mean that it goes away. It has an interest rate attached to it. So it's growing,
Right.
right? So it's better to deal with that situation as early as possible rather than letting it grow. I mean, we're in a situation where you mentioned COVID-19. Everybody understands that these are not normal times, right? And it might be easier for you to get some type of concession to get that done. Now, on the flip side, you have people who are still gainfully employed. Not everybody has lost their jobs, but there's still a challenge getting those bills paid, right? We have some strategies that we implement, different types of debt roll down strategies that can help the average person get their debt under control. It takes discipline. But then there's also situations where, it'll require negotiation with the creditors. Like, this person is just, in some cases, people are already behind. The credit, a lot of people.
You just down bad in a situation. It's just, man, right now it's just like it's a down bad.
Yeah, we gotta look at mitigation or repair in some cases, because what we're talking about, many people have already gone past that stage. It's bad. I'm not gonna pay anything because I just don't have the money. I mean, think about it. Would you rather pay the creditor on their credit card or buy food for your child? Those are tough decisions that people are making.
So for the folks who are still employed,
Uh-huh.
who are working in, essential workers and so forth.
Hmm.
Um, but we know the reality. This is a consumer, uh, I guess this is a consumer culture.
Yeah.
Um, you know, why why is this so critical right now that if you've been thinking about managing this debt and getting these things under hand, why is it so critical now that even though one may not have been impacted by COVID-19, why is it that you should seek advice of someone like yourself in terms of getting some of this debt under control?
Because you don't know tomorrow. Today you have a job,
Okay.
but tomorrow you might not. So it's good to get your debt under control at all times. But I think even more so now that we have this gloom of COVID-19 covering us, and we don't have a cure yet, William. We don't know what's going to happen. They're saying, um, you know, the end of the year. Some people are saying the beginning of next year. The government is talking about another stimulus package, possibly even lowering the amounts that people get in terms of unemployment assistance. We don't know what's going to happen. Airlines are starting to come to grips with the fact that people are just not traveling, even with the government stimulus money. It's still a problem, right? So
Definitely.
one of the things you can do in terms of being free is to be debt free. You don't owe anybody anything. That's
So,
the goal.
are you busting people bubble right now? Because some people have said, man, I've been saving all of this money. I can't
Mhm.
wait till they declare that we can travel. I'm going to fly to Italy. I'm going to go on a splurge. So are you telling, what are you saying to those folks who've been thinking about splurging, but they got some of this in the closet debt? You're going to bust their bubble, huh?
Man, if you thinking about splurging, but you have some debt, I would say, well, we can take splurging out of the equation right now because nobody can travel anyway.
Right?
So why
No,
not?
over. I'm talking about when this thing gets lifted. But some people are putting money to the side, but they're just making the minimum payments on some of these debts. You know, they're saving that
Yeah.
money for a celebration.
No,
You know,
you make a good
I
point. In
only
fact, a
live
lot
once.
of
That I only live once mentality.
I mean, I would just, sometimes situations make you face reality,
Mhm.
you know, putting money aside when you have debt. Maybe you don't understand how fast the debt is growing, right? It might be a smarter thing for you to try to deal with that debt, get rid of it, and you'll probably be in a better position to get a credit card with a good interest rate later on when it's time to travel, when the airports open back up fully or airlines are flying all over the place. um yeah, those are just little tweaks here and there. We're not here to tell people how to live their lives. Quite frankly, everybody is responsible for themselves, but we just give you information. We educate you on what is possible out there. A lot of people are talking about investing
Uh-huh.
right now, because the stock market is kind of difficult to gauge everything,
Right.
and it's good to talk to a professional so you know where to invest, what kind of things to invest in. A lot of young people, I don't know if you're aware, got into day trading,
Uh-huh.
especially when the COVID-19 crisis started initially, because companies' stocks became very low,
Yeah.
and they wanted to take advantage of that and ride the wave up. Well, some of those companies went under completely. People lost a lot of money. I know there's a situation with Hertz car rental. People had a lot of losses. I think some people even committed suicide.
Ooh,
Um,
well, tell me, I got a few more comments.
okay, let's hear it.
Thondo Connor says that is enslavement, so it is prudent that you seek help. Job is not security, and the majority of workers are a paycheck away from being homeless. Again, he says, if you splurge and while on the trip worrying how to pay your mortgage, then it is not splurging, it is stupidity. Then Focus on Liberia says this, it says, I want to be debt free, but the how is my question. How? You say, how? Where do
Yeah.
I say pick up the phone, call you? We go from there.
Pick up the phone and call me, and I'll just tell you what I'll do. It's we'll sit down and we'll do a financial plan.
Okay.
That financial plan, yeah, it's a roadmap to financial independence. That's simply what it is. You just need a financial plan. Everybody in America needs a financial plan. I don't care how much money you got, right? You need a financial plan. A lot of companies do not offer these financial plans to middle America. You have to have a certain amount of money. You have to have a lot of money, as a matter of fact, for them to even approach you and want to help you. So our mission is middle America, help everybody because everybody needs it, and that's just what it is,
That's good. I know you spoke about the life insurance as one of the financial product that's out there, and then we also talked about debt management, which is another form of financial services that is very, very critical. We will be looking to wrap up in the next 5 minutes.
Okay.
Do you have any thoughts or anything you would like to chime in about
Well,
what's going on with this life insurance industry with the recent rise in the mortality rates? Will this COVID-19 impact the amount?
that's one of the things that we're trying to warn people. If you think about how insurance companies work, like we mentioned in the beginning, the insurance company is gonna price the life insurance policy based on how likely they think you are to pass away. They call it mortality, right? One of the issues has been COVID-19. So it's critical for everybody right now to get as much life insurance as you can. We do not know what's going to happen in the next few. Matter of fact, COVID-19 started, infection rate started to decrease at some point. Now is spiking again, and the insurance companies are getting nervous. In fact, some of them have put a hold on insuring older people past anybody who's over 70. Some insurance company are not even offering you life insurance because they feel like if you caught COVID-19, you will have a very high mortality rate, or people who are over 70 have a very high mortality rate when it comes to COVID-19.
Right.
So if your parents don't have life insurance, get them their policy now. Get young people are catching COVID-19. Even if you don't die from COVID, what if you go to apply for life insurance and they're saying, well, we don't understand COVID-19, so your rate will be high. That's something you can avoid and just get your policy. The policies are you can get a policy for something like under $20 if you're young and healthy. You don't have to, and even if you're not so young or not so healthy, it's better to get it now than to wait.
Man, you got some of your guys on this. They're bombarding you with some stuff. I don't know how you answer this one. It's from is it Viceroy? Viceroy?
Visceral, yeah.
My man, sorry for mispronouncing the name. Forgive me, brother. He says, for those who have foreign assets, say in Liberia, Ghana, and Nigeria, how can this be applied to help debt management in America? And then Talu says, how much money do you need to have a benefit? How much money do you need to have to benefit from a financial plan? So
let me start with Talu's. Let me start with Talu's question. Yeah. 0. You don't
Okay,
need any
deal.
money to sit down with me and do a financial plan.
Oh, this guy is a magician, guys. He's talking about managing money, and you ain't got one penny, I guess. No, but I'm just joking. Go ahead, Borbi. Expand on that.
Yeah, now you don't need any money because we don't require any payments for us to sit down with you and set up a plan.
No fees.
Now,
You talking about
no
fees?
fees.
You ain't
No,
got no.
we don't charge any fees. We just sit down with you, do a recommendation, no strings attached. Now, based on the recommendation, obviously we're not a nonprofit organization. We are a for-profit entity. So let's say we'll come to find out, William, that you need a life insurance policy because you didn't have any. I will give you some options of where you can get a life insurance policy from. And for that referral, those companies will pay me, right?
Okay. Thank
Yeah,
you.
those
Okay.
companies
I
will pay
got
me
it.
a commission.
Okay.
Now, that doesn't mean that the price that you get will be more because I referred you to them. No, it's the same price as if you were going to go to them by yourself. But a lot of people say, it's good to shop around. It's good to not jump on the first offer, but you go shop around for yourself.
Yeah.
We do the shopping around for people
Okay.
because we
That's
work
good.
with over 100 life insurance companies.
Wow. So that means if somebody comes to you, you as being a professional marketeer, you are more familiar and up to date with all the different products, just like all the different cell phones they got out there nowadays that's
Yeah.
popping out of nowhere. You pretty much know all about these type of instruments. And so you can save them a lot of time.
Yeah.
This is really awesome.
Yeah. And
Go ahead.
Vesero has something, right, about having assets in other countries.
Yeah.
Okay. Yeah. So that's having assets in other countries. You can use assets or the proceeds from assets. Maybe you have rental properties, in Nigeria or Ghana or Liberia, and you're getting revenue from those. You can use those things to pay off debt here. I mean, it has to come through the banking system because there are anti-money laundering laws. But as far as them using your foreign assets, especially in Africa, as part of the negotiation for your debt here, no, they don't do that.
No, he
Right?
mentioned something, and just want to get clarity. He mentioned it has to
Okay.
come through the banking because there are monetary laundering rules and so
Yep.
forth. If there's someone out there who is doing their business in Africa and they've just, which is quite normal, even here, some people do not do banks. What it is that when you're ready to do some of these transfer, please check with the monetary rules and policies of the nation that you are in and where you're going to be moving the money to. There are certain instruments in place through the government that will allow you to move your money. So if you're still uncomfortable with the banking institutions, most countries will have other legitimate means. Probably one of the things I want to say is we've covered extensively some of these instruments that are in the US. And so what I want to do is I want to look forward to maybe having you come on the show and we'll look at insurance in the Liberia market. Does it even exist? What are some of the insurances that's available? Do they have life insurance there or not? And we really would love to get your thoughts and insight on that on Focus on Liberia. So that's
Okay.
something that you've definitely opened up our eyes to is the benefits of life insurance. Do you have
Yeah.
any last comment or closing remarks or anything to our listeners and viewers? And please repeat your information one more time. And so,
Okay. Is there a way to maybe pin it on the Facebook page?
yeah, I can
Maybe we can
pin it
just put
on
it
the
there.
Facebook page.
Okay.
When we are done, I can definitely re-pin it back.
Okay. Absolutely.
Yeah.
So I definitely take you up on that offer to talk about life insurance outside of the U.S., specifically Liberia, because I guess a lot of people on this show today are probably in Liberia, and Liberians here, they're wondering about covering folks in other countries. As a matter of fact, based on the poster that was put out, I did get a call from Liberia just today of somebody wondering about a life insurance coverage. So I think it'll make a lot of sense. My contact information, once again, is my phone number is 404-645-5358.
Okay.
And my email is borbibro@gmail.com. Borbi, and then the last 3 digits of my last name, borbibro@gmail.com. I'm also on Facebook, and I use my name Borbi Bropleh on Facebook, so it's easy to find me. Not to be confused with my twin brother Bior, who's also on Facebook as well. Yeah.
We're telling him, make sure he passed it over to you. And
Yeah.
Sandro says that they can come to you for free, but if the people who love paying, they can go to him and he charges 50 per hour. So
Wow. That is interesting. I mean, just to kind of wrap up, William, and I definitely appreciate you having me on the show today, because I think this is one of the topics in our community that needs to be highlighted. People, we need to understand how money works. We need financial education and literacy in the Liberian and African diaspora, because we're not back in Africa. We're in the West, and if we're living here, we have to abide by the financial rules here, right? We had our system of insurance back home. I mean, we'll put money together when somebody passes away. We'll bury everybody. Those things may not apply. In fact, they don't apply in the U.S. because, number one, it costs more. It costs a whole lot more, and you're not back home where those systems may not be as efficient. Here, you can get a cheap life insurance policy. You can invest in your children's future. You can set up policies for your children, any type of investing, children, educational funds, or just setting money aside so they can have something where it will grow. Those things are available here. It's not fair to have other people bury you when you could afford to set something responsibly aside for yourself. And people are always talking about that. So let's do that. We didn't really go into the issue of preserving wealth and having a will or a trust. It's very important, because you work here, you save money. Let's say you do everything correctly. Now you have these assets, and they need to go properly to the next generation, so you can avoid paying excessive taxes, right? Yeah. Because taxes can eat into your savings a lot. I mean, we're talking about interest on your loans at 18%, 5% on your home, or 3%, 5% on your car. You will be paying about 22, 24, 26, 28% in taxes. Right. So that will eat into your retirement nest egg more than anything else could, So you got to be careful with taxes in America, and there's no way to avoid taxes here. But you can transfer money from one generation to the other generation in some tax advantage ways. We talk about life insurance for the most part, which I think is critical. Is actually the foundation of any financial plan, William. It's life insurance. When we're working with wealthy people, life insurance is not so much of a big deal as being the foundation of their financial plan, because they already have cash. But if you don't have cash, what are you leaving to the next generation? I just worked with a client recently where this person had a life insurance policy that they got, right? They passed away. That money was used and immediately put into another type of investment vehicle that paid the person's family a set amount of money every month for life. You know, just so you just instantly you took care of your family while you're not around. Those are the kind of responsible decisions that we all need to be making as Liberians and Africans here on this call.
Thank you very much.
Question? Okay.
No more questions. One of the things I want to say is that I guess we can have you, we will be having you back to discuss will and trust. Is that something that I think I'm hoping that we will be able to get the opportunity to do?
Legacy planning, absolutely.
Legacy planning, ladies and gentlemen, that's what we're going to call it, legacy planning. So we're going to invite our guy back here, our own, and it's going to be a great show for all of our listener viewers. Thank you. Please tune in tomorrow. We have our July 26th Focus on Liberia show. And also, I believe, Borbi, you got a July 26th show coming up tomorrow too, right?
Yes, yes, absolutely.
I know ours is going to be from 2 to 5. Borbi, what time is yours?
Well, ours starts at 3, so okay. it's 3 to 5, 2 hours, and that's under the just for your listeners to know, that's under the Liberian Association of Metropolitan Atlanta, LAMA.
Okay, Lala. Okay, thank you. So we got a lot going on. It's our celebration weekend. LA, even the Southern California one that I'm a president of, I'm proud to say today we're having something small from 6 to 8.
Okay.
And we're having a costume, sorry, not a costume, our traditional wear. We're having a competition. So
oh, wow.
We're gonna get a small little
fashion show.
Yeah. So ladies and gentlemen, you know, we're wrapping up. We want to thank everyone, our listeners, people who have commented and everything. We want to say thank you. Thank you so much. And tune in for more Focus on Liberia. Hope you like our platform. We got so much more going on, and we want to thank you, and we're signing off. Thank you, ladies and gentlemen. And also you can catch this on YouTube in about 1 day or 5 hours. We're going to have it on YouTube for those who have missed, and please share it, the link. Thank you. Goodbye.
Thank you.
Where are kids? Hello.